Whew. All right. Good morning, everybody. Happy Thursday. Welcome to another Engineering the Markets. My name is Jared. It's October 6th, 2022. We're looking at kind of rounding out this week. Obviously, markets are assessing whether this rally has any conviction and strength to it, or is this similar to a lot of our more recent pop and drop kind of events that we saw this past month in September, one of our more bearish overall September performances in history. So as we're looking at our short term, just remember we're still outside of expected move. Market dynamics can control the short term, especially on Friday. So be very cautious as we see the market elevated at these levels from this perspective. Obviously, we saw the market attempt to rally out of yesterday's range and then kind of close back inside, still holding well overall at about the 3750 levels. And that 375 SPY is certainly in focus for the next move to another price level or a volume node of interest. So not too much to analyze here, but the conditions remain the same. And as I shift to the SPY, you'll notice there's a lot of stuff on my chart. So it's going to kind of cloud out the daily perspective here. For that, I'm going to go ahead and shift down to a 10-day, 30-minute chart. And I want to talk through, what we've been looking at through things like the Wyckoff method. The idea that this market may have a structure that's building, and ultimately the confirmation of this structure is going to occur if we ever see some sort of larger upthrust outside of what I believe to be phase D. Obviously, this is still a bit speculative, but we are looking at a schematic here, something that can help us define whether or not this rally has any conviction to it. And like most things, it takes time, obviously, to turn the entire S&P. And obviously, what is that going to be built on? What is the narrative and the driving force behind it? Those things take time. We're trying to get out of a very bearish sentiment, even if it is a corrective move in the market, something that will eventually fail in the future. But I think the structure here is pretty apparent. Most of last week was that balance range trading. We obviously didn't have the Wyckoff schematic labeled at the time, but the idea was similar. Trading through something like phase B in an accumulation phase is tough. You're going to see highs and lows breaking through previous highs and previous lows with no follow through. And the moves back and forth between them are aggressive. Consider Wednesday of last week. Consider Tuesday of last week. That is potentially the high and low transition inside of phase B. Obviously, the spring and test, that would have been, of course, the June low test where we didn't see any follow through. So it calls into question if that's going to hold a little bit better than certain market participants believe. And then, of course, if we are in something like phase D, the question is, how much longer do we have to be in phase D? And what's going to tell us whether or not this is going to work or not work? Well, I would say that for now, modeling this schematic is also a way to kind of define expected time in certain regions. The schematics here don't necessarily say that phase A has to last X period. Phase B is 2X of phase A. There's no real definition of that. But in general, phase B is a longer phase than any of the subsequent phases. So if you're looking at the schematic, it's drawn not because of the scaling, but it's actually drawn to emphasize that phase B is your longest phase. If that is true, and the schematic tends to be in favor, then we're looking at a potential phase of about 4 trading sessions. So obviously phase C would have to occur quicker if that remains to be true. That so far looks to be about 2 trading sessions. And then the question is, how long is phase D? Now, you know, unlike phase B, phase D can be equivalent or slightly under. Usually you're not going to see too much consolidation here, as the market has built up this usually compression event, and that energy releasing in one direction or another is going to define the next move. We have potentially traded through 2 of those trading sessions, and you can see I'm starting to adjust my labeling relative to where I believe the signs of strength are, where I believe the backup and last point of support or supply. I think it's support on this schematic. The S's are always kind of changing depending on if you're in accumulation or not. Yeah, last point of support. So the question is that what we're seeing right now? You know, obviously the market is holding at these elevated levels, but we haven't seen a breakout. Ultimately, yesterday's trade was a bit surprising off the lows, but it also supports the idea that we did back into some resistance levels and then we pushed away from them, even though currently we're still somewhat trapped inside of a middle area, about 375. You know, I will call into the fact that if I'm labeling these levels correctly, then technically the backup phase did not touch the top of phase B. You know, so whether or not I've labeled that correctly, or whether or not you would consider this area to be the top of phase B, the only argument I'd have there is it doesn't match the secondary test if I decide to label it there. So there are some changes or differences with this being a perfect match. You know, anytime you have something that looks a certain way, you want to find the problems with it. Did we back up enough? Did we shake out enough people? Did we put a bearish lean into yesterday's trade such that when we break out, that'll provide the fuel to get us away from these lower levels? Obviously, time will tell. But I believe so far, I'm going to go ahead and support this idea until we break down. And it's a very simple if-then scenario. If this area is correct and we are in phase D, then until we push below it and break back inside our balance range, this schematic holds weight. And from this perspective, I remain cautiously bullish. I believe ultimately we're just not seeing that final give, that final phase E, when really the true trend will show itself. For now, things are a bit more cautionary, and ultimately, you know, setting up new trades can be a little tricky, because the worst thing for a bull is to fall back inside of this balance range. So if you're looking at the S&P in this fashion, what should you be doing at this time? Well, if you believe in the balance range, then that area is your risk. This entire area should never be recaptured. You know, ultimately, if you're going to be bullish and price goes back inside, your thesis falls apart and it becomes a sell signal. It basically becomes another swing in the market. If you're bullish, however, you can put up defined risk trades in this area with the anticipation of phase E. And obviously that would be the upthrust out of this area, the ignition of a rally, and we'd be looking at much higher targets. Now, I'm gonna just go ahead and minimize this for now. It's a very simple if-then scenario. what's good about this is we're no longer currently trading inside of that very challenging balance range. It was actually super beneficial for day trading, because day trading, you had so much opportunity and range to play. Some of our best trades actually came off of things like Monday's session, where we had a full range transition back to the highs. Wednesday and Tuesday were actually quite opportunistic as well, because we saw the phase transitions in phase B, or the price transitions in phase B. Super opportunistic day trading sessions, probably pretty challenging for people thinking one direction or another, because there's no follow through. Really, it's just a session or two of one direction taking favor. So as we kind of round out today, the question is, what's next? And for that, I don't know. I don't have a lot of insight into what I expect next. If I'm looking at volume profile, I would say that if we go bullish, the volume profile tells me where my next major zone of contention is. Where would I expect another consolidation range to form? Whatever it looks like doesn't really matter. You can see that we're getting out of this guy. We've pushed outside of it, and we're here. We're at the next one, about 375. If you notice where we're opening today, it's about 375. So that middle of the middle is pretty tough to trade. And as I kind of showed with phase D, you know, even though this doesn't look like the most perfect triangle, it is centered at roughly 375 to 376. So it's hard to push away from that without some conviction. And anytime you kind of roll back inside, you question whether you have to go to the lows. Maybe you go to a slightly higher low before bouncing, and it tends to be that kind of tightening compression area. Some things that might help us with that, especially if we're still looking a bit bullish for the time being, is start to look at some possible studies that can define compression. You know, I'm not going to show, this is kind of an overlapping set of indicators that I use. And finding the time frame that makes the most sense for it can also be a little bit of a challenge. But most of these compression indicators, outside of maybe like trying to think of a good one here. The TTM squeeze tends to be a decent one because it shows Keltner's and Bollinger's at the same time. But anyway, I kind of lost my train there. Anywhere where you can find some edge relative to compression, I think is going to be the key for the next move. Obviously, there's going to be some pressure in regards to our risk assets bouncing. So David, you're asking about the US dollar. The US dollar bounced yesterday. The risk reversal is over. So the question is, will the trend continue, or will it start to fade lower relative to a full risk reversal indicating a more steadfast top? Obviously, changing trends would be ideal, but if it doesn't, that puts pressure on equities. Another thing maybe to look at, and I'll kind of bail on the indicator approach here because I don't have a lot of thought about it. So, you know, if we're looking at DXY, my thoughts here are that it's a hard trade to assess. It's in the middle of the middle. You know, is the trend still bullish? Yes, absolutely. Did we just experience a risk reversal? Yes, absolutely. Are there a bunch of lines on my chart? Absolutely. What's next? Well, obviously, if we break this trend line, which I just drew, it's going to put more pressure on equities to the top side, basically to rally. So if that happens, the market can rally. If it doesn't, the market can consolidate or even fade back into that balance range. So this would be your area to watch. Now these trend lines are internal, but they still provide inflection levels. So I'm not necessarily removing them, but ideally, if you break one trend line, and if you assume this one is maybe a bit too aggressive, it isn't. It's right at 45 degrees, so it's actually not too aggressive. But if it breaks, then where would your next target be? You'd probably be targeting the next trend line, even though it is an internal one. So the technicals here are clear. It's if then. It's literally whether or not certain trends break. And there's multiple, both in the US dollar, which is still technically in an uptrend, even though we saw a massive risk reversal. That was the point of last week's discussion. 10-year interest rates, still the same picture here. Obviously finding support off the 20 and rallying yesterday. So that becomes an area of contention. If the 10-year interest rate can bail through that price, then it's a significant change in the daily uptrend. And obviously the weekly is showing a top, but it doesn't mean that there's follow through yet. It's just the risk reversal from last week. That's when everything kind of came to that head and everything was the most extreme we've seen so far. And obviously volatility, the idea is the same here. It's still a trending market, albeit the risk reversal was opportunistic at the time. So when I say I don't know what's next, it's not because I lack conviction. It's because the market itself is not giving me a signal. There's nothing here I can use outside of the core trends that have been established. So I have to assume those are going to continue. And if they fail, the longer reversal that I'm looking towards that Wyckoff schematic might play out. So, if you are looking at this rally as a moment to get bearish, or even to define a little bit of bearish positioning, the thing that you want to see is a break in the reversal structure. If you believe that Wyckoff schematic breaking back below 370 SPY, that will probably be a very interesting signal. What else do you want to see? You want to see the dollar strong again. You want to see VIX or volatility climbing. And what's been interesting is throughout that rally, that hedging rally, that extreme conditioning, a lot of it has come off very quickly. This is the VVIX, the volatility premium appreciation or depreciation in the VIX futures. This has actually come down significantly. So it calls into question, was that just a one-time spike for the moment until the next major issue shows itself? Or are we actually just looking at a pause before a massive continuation? I personally think that there needs to be a spark. In order to facilitate more downside, significantly more downside, there probably needs to be something that breaks. And when I say something, I mean something important. A company, a financial institution to some degree. The thing that's really going to break this market's back is going to be true fear. We haven't really seen fear yet. If you're arguing where does the market go during corrections, it tends to go to about the 200. Even in the worst case, the 200 is the area to consider. It's on the weekly. And obviously, ignore all this junk here, but look back historically, major corrections often go to the 200. So if you want this market to go lower, you need something to break. You need the market to fall apart. And as we've kind of looked historically, I'm not going to pull up a weekly here that far. I guess I'll do a max here. What do you truly want if you want this market down more? You need a crisis. Otherwise, we might be done. So the idea is simple. It's if then. It really is. And I'm talking about major waves here. something has to break. If we are done with this correction, even if it's not bullish, it might trade sideways for a period of time. That's fine. But if this market is done correcting, then this is the area to consider for new potential trends in the future. If it's not, and something does break, then obviously the downside is still very attractive, and we will position accordingly. But for now, you're at that edge. You are literally on the cliff of risk. So whether to play it down now or to play it down when it shows itself, I think is a more important question, because if you play it down and you're wrong, then you're missing a fairly significant opportunity throughout most secular bull markets. And the question is, are we in that condition right now, even though our correction falls into bear market category? So obviously that is a question for a larger discussion. It's not necessarily true or necessary for today's trade. I just ask mostly for things to be defined. Why are you bearish? Why are you bullish? What's your purpose? What's your intention? Someone's asking about oil. Oil had a catalyst. We did have a run up off of the $77 per barrel inflection. I told you all about that last week. You either took the trade or you didn't. OPEC did cut production by 2 million barrels per day. So we are seeing the crude market show signs of a possible trend break. You know, it's maybe the first trading session outside of the trend line, kind of a significant moment if this is starting to consolidate, or maybe just start to put up more of a probably like a weekly corrective wave, you know, something that actually has a little bit more follow through. But you know, as far as where that trade was engaged, in my opinion, I believe that once we hit that inflection and once we saw a little bit of pricing towards that potential production cut, there was a little bit of like market pricing towards it. And then it happened. That was, instead of a sell the news event, it kind of became the fair value for crude. We'll see today if anything changes, because most of these rallies die at the 50. If that does occur, I would expect more sideways trading for now. Like, I'm not necessarily thinking bearish crude anymore, simply because of that inflection point. So, you know, whether you are looking historically as to why that inflection is so important, or you're looking at the catalyst now as to why crude is up over the past couple of days, you know, choose your poison. But I believe that crude has probably found at least a stall point for now. 4-month downtrend with the first inside candle on the monthly. So it's pretty obvious from the chart that something is changing, even if it is temporary. So, all right. Is there an oil ETF? Yes, there are a few. A lot of people use the United States Oil Fund to kind of just get new positionings. If you're looking to target directly crude, you know, look into this product. It's not a one-to-one, but it has some of the derivative characteristics of tracking the crude futures market. If you're looking at energy as a sector, XLE. And obviously, XLE has a trading range defined. We saw a little bit of a breakdown whenever crude corrected significantly, and that was obviously a very volatile time for the energy market. But since then, we've seen more or less back and forth trading, and this catalyst in crude, along with the inflection level, in my opinion, sparked another rally. You know, we are at the high, so be somewhat careful here. If you're trading energy stocks, in my opinion, the move is done. Could we see more upside? Absolutely, but I'd want to see something like this. We have to get out of this trading range. And obviously, you know, the longer you trade somewhere, the more the volume profile shows it. So, oh, I'm not wearing a coat, but I am wearing a beanie. So it is half as cold as what's needed to wear a coat. But my ears get cold first. So this is just a polo. So anyway, that's kind of my thoughts here. I'm probably not going to look at too many other products, but if y'all have any questions, let me know. We have about 4 to 5 minutes here before I have to sign off. How do you feel about Gush? It's a levered ETF for oil. So that's how I feel about it. If oil is bullish, Gush is bullish. If oil is bearish, Gush is bearish. You want to lever your returns on those trades, use Gush. If you don't, use something else. Don't overcomplicate levered products. They have a purpose. Gold and the call put ratio changing. If we look at gold's significant risk reversal move based on the dollar, in my opinion. I like the levels that it's at. I think if you're looking for more downside in the dollar, gold is a great proxy for it. And if I'm looking at trends here, similar to the dollar, this risk reversal is probably over. Like if I'm trading this on any time frame, I have to assume to take profit here because that's where the risk reversal goes. It's where other risk reversals have gone. And, you know, similar corrective moves in a larger downtrend have to go there. But do I like these levels big picture? Well, if the dollar backs away more, then yes, I'd probably like gold down here a little bit longer. I'd be thinking maybe gold back to like 165 if I'm looking at GLD. And gold futures probably back to about 1780s at the most. But what's the condition for that? The dollar has to back away. So gold and silver, gold especially, but silver as a proxy, they have to have dollar in their favor in order to trust a move. Otherwise, there is often a consistent correlative pressure, and we'll talk about that in Florida. But you know, these products are well known to track inversely the dollar. So, and what was the last one? P-call. Let's take a look. I haven't actually looked at P-call recently. We're not in an extreme. We did spike 4 or 5 days ago. So what day was this? Looks like we spiked on the 29th. And that was another spike reading, 3 spike readings in a downtrend on the S&P. You know, this is more of a full option market view, not just S&P, but it tends to be a good proxy. I do like this if we see another spike. I just hope that it doesn't occur with another price move. So for example, if for some reason there was a move to about 1.2, 1.3, and the S&Ps were down to right around 370 and reversed, that would be another, in my opinion, another possible risk buy signal, just because the market is on an extreme of puts. And usually I like to play the reversion. So I do like that potential. It's not really showing anything significant yet. And as we've seen, price is still making lower lows, you know, all the way back to down to June. So Okay, well, with that said, my time is up here. So thanks everybody. Trade safe today. Have a great rest of your trading week. Have a great weekend. We'll talk more next week. And yeah, look forward to more in-depth discussions. I have another idea for next week. We'll kind of see how it comes to fruition. And as always, yeah, like and subscribe. Stay tuned for pre-market prep. We'll talk more then.
You are having an amazing morning. Hopefully, you guys had an incredible day yesterday. Good morning, Norm. How are you doing today?
Morning, buddy. I'm doing all right. How are you? Sorry, I'm trying to take some medicine. I'm still under the weather. I put a pill in my mouth and then I was messaging somebody
Yeah.
as you asked me that. So sorry.
No worries,
I'm
no
all
worries
right.
at all. All right, good morning, guys. Let's get to it. Let's start with our gappers list today. Things are in the red this morning. We got a couple of things in the green. Well, just one right now, pins, and some other names that have been really, really active the last couple of days. A couple of low floats or riskier type stocks here on this gappers list today. So a lot of our usual suspects are pretty much flat right now. I'm sure, depending on how the market does, some of these will start creeping up into this list here. Yesterday we had Neo on deck. Let's take a look at that one. Bring this right over here. Here's Neo, and we start looking at our watch list from yesterday. Pre-market action, Neo. I've been saying how great Neo has been trading the last couple of days. Part of it, the market is helping it. We know that the market, the volatility that we're seeing there has been incredible, and we've been taking advantage of that as day traders. But here, Neo, man, completely dropped off the face of the earth here. I mean, it's just a very clean short. I know there's a lot of things are falling apart like this, but Neo traded very, very clean. Lost the VWAP here. Did give you a little fake out. I'm telling you, my finger was ready to hit long on this thing here. But the fact it was hanging out below the VWAP, I didn't. I kept hearing Andrew's voice. I like it above the VWAP. I like it above the VWAP. I'm like, yeah, let me not take this trade. And glad I didn't. Look at the drop you got here all the way down to 1570. So very, very nice opening play here on Neo. Next, we had Tesla on deck. And similar situation as well, guys. A little pop at the open. Could not hold. And just look at the drop you're getting here. You got it here on Tesla all the way down to 234 from 245. So again, decent moves you're getting on this thing. You did get a bounce. This bounce you did not see on Neo, so you did not get this recovery on Neo, but you did get it on Tesla, which was pretty nice. So again, just so many moves that are happening here, and we'll look at the SPY in a second. We had a nice drop in recovery yesterday. Norm will talk about that in a bit. Here's Twitter, and Norm, you're completely right on this thing. Pure garbage yesterday. Did not do anything. Volume swinging left and right, but didn't really do much. Right, just kind of flat.
Garbage.
Yeah, garbage for the entire day. Pop here, more garbage here. So again, just nothing really happening there. Ford, I didn't really look at Ford. Let's see here. Yeah, it's again very similar to what the EVs did. but not as clean. Look at these 2 wicks here. Again, just not really clean trading. Very active though compared to what we are used to seeing out of Ford, but not really clean trading until after 11, where it found a nice base. And then look at this move, guys, from 12.15 to 12.50. I know it might not sound like a lot, but for Ford, that is a very decent move. Getting to some of our usual suspects, just kind of did what the SPY did: AMD, Apple, and NVIDIA. And they all did it very clean. There was not one that was better than the other. You could have traded any one of these and you would have done very well. AMD and NVIDIA had the better short. Apple was kind of sideways a little bit. But again, if we look at the SPY, which we'll get into now, you can see same price action. The drop here at the open, and then the recovery around 11, nice double bottom, and just look how the rip was into the market close. So with that said, Norm, overall SPY, latest and greatest today.
Yeah, as you mentioned yesterday, we opened with a decent gap down, about 1% after the biggest 2-day rally in 18 months or so since spring of 2020, and then clawed all the way back to green, and then finished just slightly red. This morning, we had our really only data points of the day just a few minutes ago. Initial jobless claims came in a little bit worse than expected, continuing claims as well. So just shows, we had the JOLTS number a couple of days ago, just shows the job market is drying up, as we all suspected it would start to do. Maybe it's starting to show some cracks there. That did help the SPY get to green from slightly red, no big deal. But yeah, so that's where we sit. We'll just have to see how that digests. Kind of a quiet day. I think after the last couple of days and the huge gains, people are just going to sit on their hands a little bit and wait. And somebody's mentioning PMI today. No, there's no PMI today. We have non-farm payrolls tomorrow, unemployment rate and such. Our next inflation data is next week, so we shall see next Thursday. So we'll see where we go between now and then. That's going to be the next really big chunk of info, unless there's some surprise on the September payroll September jobs data. Hello.
Sorry, was on mute. Thank you, Norm. With that said, let's get to our list here for gappers. So starting with, we have on deck pins. So if we look at pins here this morning, they are active. They're up 5.8 right now, 451,000 shares traded. They don't usually put a great pre-market activity, but they got some decent volume today, Norm. What's the news on for these guys today?
An upgrade out of Goldman. Upgrade out of Goldman from neutral to buy. Raised their price target to 31 from 24.
Okay. All right. We'll look at, let's type this correctly. Pins. Here we go. So we'll look at pins. Again, good volume this morning. They could be a hit or miss. I like this gap up above some of these daily levels. Let's see what happens. Let's put it on the list. The only one in our green territory this morning. Let's see how that's going to turn out. And then towards the bottom, we don't have a whole lot here that looks great today. We have tops, low flow, which actually took off yesterday. I kept it off my list. I actually was looking at KITT, which Brian mentioned when on his watch list, but actually took off pretty nice. I know some of you guys were watching this one. I'm not sure if you took a trade on it, but it did trade well. Again, this stock is a hit or miss, lower flow stock at 2 million shares traded. I'm not a big fan of it, so I probably won't keep it on my list even today, especially after 2 days of doing this. Today might be a little choppy. Again, I could be wrong. But just be mindful if you're going to be watching this one. Finger motion. This one's been on our list on and off. Another green day for it yesterday, going from 5 to 9. And again, moving like this with no news. Today, down 12.3, 123,000 shares traded. Again, you cannot tell much about with the pre-market. You kind of have to wait for the market open. But I'm just not a fan of this nonsense, right? We could make money doing other things, trading other things. So heading down to SHEL, they are down 5.3. This is Royal Dutch
I would have found
Shell.
a different way to say that. I would have said we can find an easier way to, or we can find a more fun way to lose money than trade that garbage.
Oh yeah, that's better well said. I agree 100%. So here's Shell, a foreign company in play today with everything going on. They're gapping down 5.3. Their price action, though, still not the best. They're very light on volume, even when they get big news, right? They don't trade heavy volume. So the price action could be a little funky. Not sure if today, Norm, maybe will be their day. Like if there was a day to watch this, maybe today will be. I'm just not 100% sure. No way. Take it off.
Almost anything based in the UK trades like garbage.
Yeah. Even with news,
great tennis, horrible tickers.
Agree, man. Agree. I was trying to be nice to see if this today will be their day, but I guess not. I mean, it's just bad. It's just bad. I agree with you.
No, they issued a warning. I mean, the news is the news. They issued a profit warning. But still, it's no. Yeah.
Chris MC, it is, man. It's going insane. He's talking about Fingerhut here. I mean, not Fingerhut. That's another ticker. Is Fingerhut went bankrupt, right? I believe they did. FNGR. This is the guys who used to send letters when I used to live in the city. They used to drop letters in your mailbox, magazine or something. Here's Fingerhut, guys. Finger motion. And it's going insane with no news, right? If you guys find news, let me know, but it's just madness. KITT, low flow that was very active yesterday. Today they're down 5%, and it didn't trade well. I actually had this on my watch list. It popped up pre-market, had a little pop here, and then just couldn't get a continuation. So it's pretty much garbage. Today I don't have any hopes for it. BP is another foreign company that ticker that does not trade very well. They're down 2.7. You know, these type of oil type plays, Oxy's really the one I go to. Twitter, just insane garbage yesterday. We expect the same today on this one. Gapping down 2%. Again, with great volume, but just at the market open, you're not getting no continuation, which is so important to us. Guys, not a lot off this list. B is coming up on our gap up list, BEAT. And this is just taken off, up 32% in the last 15 minutes here. And so let's put this on here. The float on this 3.7. This could be the flow of the low flow of the day. We'll put that here for now. Norm, any very slim pickings today. Do you have anything you like this morning?
Oh, I'm very, very pleased that today is my son's fair day. So,
yes. You won't miss anything here.
I absolutely hate going to the fair, but it's going to be better than this.
Oh, yeah. By far. It will be.
You guys will find something to trade.
Yeah, there's something will come up just right now.
Every day. It's just bad right now.
Right now, there's nothing pre-market that we like. But I'll tell you this list is going to fill up with our usual suspects, Apple, NVIDIA, AMD. And all we need, Tesla. Yes, let's not forget about Tesla.
I took a quite decent-sized position in Tesla yesterday.
Nice.
Long or short? And completely forgot about having it.
I done that. Hopefully to the upside.
Hours later, I was like, "Oh shit! I have a large Tesla position." I was actually in a meeting with Andrew, and I said that, and I looked, and I was like, "Thank God it's green."
Oh, nice, very nice, very nice. I'm glad, because it seems like when that happens, it always is red. It's never green. So. The fact that it is green, very nice, very nice. So Tesla on the list, guys, active again. Notice how it's a little bit less volume than the last 2-3 days, right? In the pre-market, only 970 compared to the 1.5, 1.8 that we're seeing, 2.2. I think one day was 2.5, 2.8 million, right? So a little bit less, but nevertheless still active and in play this morning. We're going to have Apple on deck, which again, Apple, AMD, and NVIDIA, all these growth stocks, tech companies traded very well yesterday. They followed the SPY and the Qs to the T, and that played out nicely, right? So that's all we need. We don't need a strong, huge catalyst. We just need the SPY to do something, and many of these companies are going to follow suit. And the way the SPY is looking this morning, right? Flat right now. This is why your gappers list is looking pretty flat. It's very active, though. It's very, very active. So I'm hoping that we can get something out of this today on some of these usual suspects, right? So that's what I'm looking for here on the SPY and the Qs. Let's take it to the room, see what you guys like this morning. Mara for a breakout. Jared's looking at that. Let's take a look. Is Mara active today? Daily looks good on Mara. I have not been paying attention to this one. It just hasn't been trading well for the way I'd like to see it. Other things being better, but I do like the breakout on here, Jared. I agree. maybe Apostle for now, and we'll see what takes place there. Apple and Tesla for me, Jason. I agree. You cannot go wrong with those. Those been on fire. Well, Tesla this week especially, but they've been hot for a while. Yeah, I am not a big fan of Mara at all. I am not. But there's stretches where it does very well, right? I usually don't catch the first day of those stretches. It'll be like 1 or 2 days, and then okay, this thing is in focus, and I'll put it on the list like we did here. But sometimes it's just it's not great. I'll have like 1 day out of nowhere where it can be exciting. Guys, let's give a thumbs up over for Jared this morning, 8 a.m. Engineering the Markets. If you're missing that, you can catch every Monday through Thursday. We're sitting at 73 likes. We'd love to be at 250, 200 before the end of the show. So if you could help us with that, appreciate you very much. Heading over to our YouTube chat. What do you guys like today? Piton. Yes, actually, yeah, we didn't talk about Piton. Is it laying off people? Did I read this right? I read it quickly. Or they're looking for, it has some kind of growth plan that they're looking to set up here. So yeah, Piton on
like
deck today.
People.
Yeah, they're laying off 500.
Yeah.
So
like
not
10,
good.
12% of their workforce.
And this is after they had a layoff before, right? This is the second round.
Like 18 rounds of layoffs, I think.
Okay. So not good for them. They're pretty much flat right now with some volume. I know in addition to that.
Layoffs sometimes come with as a positive catalyst.
Oh yeah, they're not negative.
Cost-cutting measures are often a decent thing. I will say though that the CEO, the founder walked away from this, but the CEO essentially said they've got a limited amount of time to prove that they can survive as a standalone company, which is no bueno.
Yeah, not a good sign. So we'll see. We'll see how this is going to trade. I mean, layoffs could be good. You're cutting costs, like you said, but just the overall situation with their plan, it's not great. So let's see. Piton here. We'll put as a possible. Heavy news around it. Not a whole lot going on right now. Pre-market pretty much flat. Market open will give us some more information as those candles start to build up and that volume comes in. Piton and all Hiltons, that's
old news.
Yeah, it's old news, but also, I don't know how great that's going to be. I don't know. We'll see. A lot of their money comes in from the membership too, guys. Remember that membership sign up. That's a big revenue for them. So if you're in a gym, you're not going to be usually one time. You're not going to sign up, right? I don't know. What else we have here? Twitter. So all right. I think that's all we have, guys. Again, not a whole lot. We don't have to go crazy. Let's get over to community events and announcements. We have time, so we'll show you a little bit of our trading terminal, what we got going on there, and then we'll come back and see what's on our gappers list, and we can continue to build from there. So, no, let's show our trading terminal. Show you guys what we got going on over here.
We can show them everything.
Yeah.
Tradingterminal.com, guys. This is an awesome free resource. It's getting a lot of buzz. We're having a ton of people sign up for it. It is free, completely free. You do have to sign up. That way it saves your settings and such. But everything from heat maps to news to Squawk, the audio news. And then you can get to the simulator from there too. So all those things. Hope you guys enjoy it. We've had great feedback. We continue to improve it. We are building it back better every day. So anyway, go check that out at tradingterminal.com. All right, webinars. If you're interested in what we have going on in the next couple of weeks, you can always go to barebulltraders.com/webinars or click the webinars tab in the nav bar at the top of the screen. Every Monday night, 8 p.m., we have onboarding and technology with Carlos. Go there, especially if you're newer, to learn the ins and outs of BBT. Then on Tuesdays is strategy. Next Tuesday, 8 p.m. is Thor. He's going to be doing his volume price analysis talk about the win. And then the following week, my man Carlos talking about the opening range breakout, specifically 5-minute. On Wednesdays, we do psychology. We had Dr. Reed last night. That should be posted soon. Next week, we've got Kreda. She's going to be note the special time, 5 p.m., because she's in Europe. She's going to be talking about discovering your inner demons through self-reflection. And then the following week, we've got Mike talking about how your personal values affect your trading performance. Mentorship on Thursdays. So today you've got John at 11, Ed at 4, Thor at 8. All right. A couple of things, guys. We're going through. Oh, there we go. StockTradingSimulator.com. I already mentioned that. If you are watching on YouTube and you have not been in the chat room, you can go to BearbullTraders.com and find the membership chart about halfway down the homepage. Click on the intro membership. You can do a no obligation 7 calendar day trial. It is a one-time payment, does not recur. And if you use the promo code PreMarket24, you'll get a discount off of it. 7 calendar days, 5 trading days in the room. If you'd like to become an elite member, you can use the promo code READ50 to get half off the elite membership, access to all the webinars I just discussed, and of course the chat room as well, and a free one-on-one coaching session with Dr. Reed. I do have one more very important piece of info here. Carlos, can you either click on the link that was posted in the alerts up top or go to bearbulltraders.com/workshop, please, senor?
Yep, excellent. Clicking on that link right now. Here it is.
All right, guys, here we go. This is our first time we've had a meetup / workshop / seminar / retreat / whatever the hell you want to call it, where we've traded live. Fort Lauderdale, November 2nd. So about a month away. Limited number of seats, guys. This is a full day workshop. Andrew's going to trade live. We're going to have other traders, other mods in the room walking around. You're going to have Brian, Andrew, Peter, Mike, Jared, Susan will be there, and Thor. Walking around, helping you, with your trading. And if you bring a laptop, you can trade with them live in the room. We're going to do the pre-market show. It's going to be streamed into the room. So should be really, really fantastic. There's your full schedule all day. So live trading in the morning, and then you're going to have some discussions about the market and such. A nice lunch, the Under the Tuscan Sky. If you scroll down a little bit, you'll see the menu. So you have coffee in the morning, then you have a full menu, chicken rav, happy face, tortellini, tiramisu. Oh my goodness. So anyway, November 2nd, guys, go to bearbulltraders.com/workshop. You can sign up for that. There are a limited number of seats at the Westin Fort Lauderdale Hotel. So we also have a room block that you can get a discounted room rate. That will be given to people tomorrow. We don't have the code. They don't have the code set up for us yet. So anyway, that's what we've got.
All right, thank you so much for that. It's gonna be fun.
I wish I could make it.
Don't miss it. Yeah.
I unfortunately have a sailing trip booked. I'll be in the middle of the Gulf of Mexico.
Nice.
It's been booked for like 6 months. So
yeah. Excellent, man. Don't miss it, guys. Again, it's limited seats, so don't wait till last minute. If you are if you're not sure, don't do that. All right, let's get to it, guys. We are looking at our list this morning, starting with here pins, Tesla, Apple, AMD, and Nvidia. So again, a pretty default list with a lot of usual suspects on here. Just kind of waiting to see what else builds up. It's not a whole lot that looks great off the gappers list this morning. ANVS, I see making an appearance on the gap up 10% at the moment. We've seen this before. It's not a great ticker. It can be explosive. A low flow stock at a 5.6. Be very, very careful. I don't like the action this morning though. A pop and just kind of drop back down here. But yeah, this thing can move. I mean, this is going from 14. Went to 19 pre-market right now. Very early on with very light volume. Very, very careful if you are going to be touching this thing. Make sure you have a plan and that you're experienced in trading this year. All right, we can set some levels now, and then we'll come back and look at the list. If you guys see anything that looks great, throw it back out to me, and we'll take another look at it. But again, we're not gonna hunt too hard today for things. We're just gonna let the market do what it does and see what pops out of that. I love the pre-market on pins. We'll start here at 25.52. The high of the pre-market over at 26.25. So that's good there. Where the price action is right now, there is a level slightly under it at 25.89. Right, so 25.89 is like the high of this somewhat of a very unclean consolidation period here. 25.89 looks decent. And you can see here a little bit, we got some action happening there. The only issue with that is we don't have a whole lot of volume flirting with this level yet, but the little bit of volume that we've seen this morning is somewhat respect that 25.89. So worth noting there just in case. Let's look towards the upside. If we were to break out of this thing here, which again, the pins having some good news here. We're looking at a 26.89, and then we're over to 27.93. I think that's all you need for now. Towards the bottom, you got your highs and lows of the last 2 trading days. You got the gap from the gap up here as well that you can possibly close if you want to head back down. But we'll see how strong this catalyst is going to move pins today. Volume's looking good already. 503 for pins pre-market is very, very good volume. They normally don't trade a whole lot. And remember, they are sitting on the New York Stock Exchange, which they tend to have lesser pre-market activity and volume than things sitting on the NASDAQ exchange, right? So for example, here, by the way, this is why I keep this here. This is the exchange. So it'll tell me quickly, okay, where we're sitting at. As you can see, NYSE and then Q would be for NASDAQ. So a lot of NASDAQ this morning on our list, things that have been moving very, very well lately. Tesla, we don't have to spend too much time on this. We know how crazy this has been, how volatile it has been. The only thing I can tell you is make sure your stops are realistic on Tesla, right? I struggle to trade Tesla because the stops need to be so wide at times, right? And it's just it's a comfort thing, right? Because I know I could take less shares, it'd be the same thing, but it's a comfort thing to let things go that far from the entry. Although it's percentage wise is not it shouldn't be an issue, but mentally is something that I kind of struggle with. But if you can trade Tesla well, it is an animal. It is it can treat you very, very well if you're disciplined. 237 low of the pre-market here, and already our high of our pre-market is actually above the previous day close, up into 241.18 or 80. I'm not going to mark it. We have the low of 2 days ago right on here. So again, I don't need to put another level on here, just a couple of cents away. It's not needed. We got some very important levels here. We got the previous day close, and we have this one, which are doing a pretty good job right now. Bigger picture on the daily, you're surrounded by levels here, especially from the last 2 trading days, the previous day close. I'm not going to add anything else on here. Every day red, by the way, look at this. Although we gapped up on a few, right? Actually, no, everything's gapped down, actually, right? Yeah, gap down, sell off, gap down, popped up, sold off, gap down, sold off. Everything is gapped down on Tesla since the last week, looks like. Man, all right, so nothing but red for Tesla here. Again, we're getting a little bit of a bounce, trying to get into the green. But yeah, it has not been great for them. Apple, guys, another one. Usual suspects on deck. Again, just if you look at Apple, you look at the SPY, it is the exact same thing. So eyes on the SPYs today, the overall market, to see what that is doing. I mean, look, if I take the ticker name out and I put this next, side by side, like I have it now, you can't tell which one to switch. It is basically overall market activity on the SPY, and I'm going to assume, let's look at AMD, same thing. NVIDIA, exact same thing. Again, I mentioned before, the only reason why I have all 3 of these is because once in a while, one would trade better than the other. One might not sell off as great as another one does, depending on what levels they're sitting on the daily and just overall pricing, action, and value of the ticker. So you might not see that. Yesterday was a different case. Yesterday, all 3 of them traded exactly the same. They were in sync with the overall market. I think AMD and NVIDIA had a better sell-off than Apple did before the pop, but again, all of them very, very similar. So that's our usual suspects list today. We're not going to go too crazy on this. Let's get some levels in here for these guys. Although we're not going to add too much, because based on the way they're trading, you had the drop and then kind of the push up. They're stuck between these highs and lows of the last 2 trading days, which are providing some really good levels, especially this one here. Previous day close, highs for the last 2 trading days right on here. Look how great that level is. You've seen some action in the past there. So that's going to be exciting. That 131, what is this? 132.09. That's going to be an exciting level there for NVIDIA. If we were to swing out of that towards the top side, we are looking at 140. 140 is a very decent level. There's a midpoint here as well, which looks really good. It's 136.63. Tons of days opening, closing right around that area. So you're getting a little action there as well. Towards the bottom, just going to add the low of the pre-market. That's all we really need. We got 2 more levels below that are doing a doing the job for us there. So based on the lows of the last 2 trading days. So 130 low of the pre-market, and you are pretty much set on NVIDIA. AMD, we're looking at very similar situation, stuck between the highs and lows of the last 2 trading days, pretty much on the previous day close line right now. At the moment, so not doing a whole lot. High of the pre-market on this one is sitting at 68.25. So we will slam a level there, and then towards the bottom, looking at 67.05 or so. Slam a level on there as well. I think you're pretty much set on AMD. And Apple, just to close out our usual suspects on the tech side here, 145.03, low of the pre-market. The high of the pre-market pretty much smack on to the high of yesterday. So do not need to add anything there. You're pretty much set. And towards the top, in case we are pushing higher today, the market will determine that. And sure, by the open, 149.62, good level of support there, a little bit of resistance, and then above that, I mean, I don't think this will be a stretch. 153.11, I don't think you're getting there, but if we were, it's going to be a really good day to get that type of movement after the last 2 trading days. You got 153.11, good area of support that we've seen in the past. A couple of possibles here. We got Piton, which again, moving sideways right now with some volume. They have news today. They got a couple of news things going on for them. Some positive, some not so positive. Let's see how the market open is going to treat this thing. We need volume on Piton. We have it now pre-market, but this thing can go either way on whatever news you're looking at. Here's Mara for a possible breakout on the daily, also looking good here. If we can get some volume and get going, right? So, and then we have B, which is started very strong here around this area. Nice little pop, kind of dying down as far as price action. We don't want to see this. We don't want to see this come back down to 475. We want it to hopefully hold here, start doing some ABCD patterns, some consolidation, and continue to hit that high of the pre-market. If it dies down, then it won't be good. But this thing just starts to get going, so we can give it a little more time before we trash this, if it's not going to be a great low flow for the day. Remember, low flow stock sitting at 3.7, so you got to be extra cautious with that thing. Bottom/downside levels for Tesla, didn't we do those? I have just 2. I have the low of the pre-market here, and I have the low from 2 days ago. I don't low of 2 days ago. I don't think that's going to happen. I think we're going to get a lot of maybe more sideways action than anything, right? So if you're looking at these levels, if you don't have them down, I'm looking at 233.07 is the low from yesterday, and then I got the low of the pre-market now at 237, right? If for some reason we are very bullish, very bearish this morning, and things head south, the next big level that just sticks out right away is going to be 225.02. I mean, you have tons of stuff happening there. If you draw a line on that, you can see that there. And there's a midpoint here, 230. Yeah, 230's got a couple of wicks slamming into that as well and bouncing back. You see that here. So it does like to test that level and then head back up. Tons of wicks just kind of going in that direction and slamming back up. So that could be another minor area of support that we can see today. But 225.05, 02, definitely very, very strong level. You got a lot going on there as well. All right, let's take a look. Early, we have time to answer some questions, look at some other tickers that you might have. I see their Moderator is putting the list together, very similar to what I am looking at as well. I see Peter, Thor, and Susan. Let's take a look at Billy. Andrew is giving us Billy here. Let's see, Billy. Andrew in chat. So Billy, I don't know about this one. No, volume is way too light. Billy can trade very well. It used to trade. Actually, Billy was one. It was Billy, SQ, JD. If you guys remember that, those 3 were on fire for the most part. But I don't see anything going on today with this type of volume. So we need more volume on here. I see the daily for a possible breakout, very similar to what Maris trying to do on their breakout here, but the volume is just not going to allow us to put this on here. So no. BP is trading much more weaker than every other energy stock. Let's see. BP. Yeah. They're not just they could be trading weaker, but they're not a clean trading stock, and that's the concern with me and VP. They don't trade as clean, so there might be other things that maybe are not as weak. that can give you a better price action, right? But again, on big news, those tickers that don't trade very well can move very well. We've seen that, right? They have their days. So for example, MRO had its day here, right? Look at all these drops here and a beautiful recovery. So it's just the price action is a little bit different, and I'd rather watch something that gets more volume. How did Oxy trade yesterday, by the way? Speaking of Oxy, I saw it was starting to get going. We did mention it in chat. I had it as a possible. Yeah, it did get going after 10. After this messy start, it did give you a nice little pop and continuation here. So Oxy did do good yesterday. The days before that, it was just brutal. So so the thoughts on Oxy. Yeah, volume, but you know what? Don't go off the volume on Oxy too much, because we've seen Oxy have terrible, terrible volume in the pre-market. And in the market open, you are going to get the volume. Look, they're averaging what, about 28 million, 30 million shares on a regular basis, even when they're not in play. When they got big days, you'll see something like this, right? Above 40. Obviously here, huge day, 79. Look at that nice little pop, right? More than double of what they're usually doing. Same thing here. This whole stretch, you can see a nice increase in volume. So don't go off the pre-market volume too much. And some of these days you go to them and it looks just like this, like there's nothing happening in the pre-market. So this is a great example of a stock that we know for a fact the volume can be 50,000, 10,000, and market open is just going to flood in. So don't go off of that too much. Today's pre-market volume, 176, is actually not bad at the moment, but you're going to see just this type of choppy pre-market action that Oxy loves to do. See here, same thing, choppy pre-market action, not very clean, and then the bells go off and this thing just does this thing here. So it's a hit or miss type stock. On a day like today where we have space, yeah, we can look at Oxy. We could definitely have a room for Oxy today. All right. Anything else I missed, guys? Do you guys like this morning? Our gappers list. Let me see if there's anything new. SPLK. What is this? Oh, no. This doesn't look good. Splunk, whatever this is. No, not great. And I think that's the only new one that has popped up here. Okay, excellent. I'm going to be waiting for this guy to do something, the SPY. I'm going to wait for the SPY to determine what the day is going to look like. And again, I can't stress enough, guys, how waiting, especially in this market condition, waiting is not a bad thing. I know I mentioned this a lot, but it's so hard to do that when the bell goes off. Our energy starts running. We get the adrenaline pumping and we want to get in a trade. But look at Apple yesterday. Look at the first half hour of Apple, right? Especially the first half hour, just messy. There's really nothing going on here. Then you get this nice drop. You play off the low of the day here. That could have been a good opportunity, leaving the VWAP. And then if you were patient enough, this type of market is giving you so many opportunities throughout the entire day. Look at Apple here after it finally finds a base, and then the overall market decides, hey, we're going to go northeast here, and everything just follows suit, right? Back to the VWAP, obviously a little consolidation there, and then continuation back to the break of the high, a nice little pullback. I mean, this is a perfect day trader scenario right here where you're getting so many opportunities. But if you waste all your ammo here, then you can't take advantage of what's happening up next, right? So be very, very careful not to force something in this time frame. Yes, I know this is a time frame where a lot of traders make their most money, where it's the most volatile, where some of your strategies might be all in this time frame. That's okay, but don't force something if it's not there, right? Very, very important, guys. I see a lot of traders do this where they start off in the hole because they traded the first 30 minutes, 15 minutes, 5 minutes, and then they make their money back. They'll break even or they'll make a little more. And imagine if they did not have this loss here and just stop trading in this time frame and traded 30 minutes after, right? They'll just be sitting on those gains and don't have to pull themselves out of that hole. All right, 908, guys. Moderator is coming in with their list here. We'll have that for you guys in a second. Right at the moment, we have pins. Dylan says literally me every day. Yeah, I'm telling you, it sucks to play in a hole and trying to be getting out of it. So it really, really sucks. So this is why journaling, guys, is so important. We got some time to talk about this, a little off topic, but journaling is so important because you need to be able to see what's working and what's not, right? And your journaling should be able to track timeframes, right? You could use something like TraderView to be able to get that information if you track it properly. and look at the time frame you're trading in, and how are those trades? What's the win rate of those trades? How are those trades being played out? And if you see that, hey, there's a common pattern here where something's not working at this time frame, guess what? Stop trading that time frame. Difficult to do, especially the market open, but you got to be disciplined. Pins, still not doing a whole lot. Tesla looking very, very good, trying to get to the green area here. This is one that's not trading with the overall market, which is nice. Overall, as far as the daily, right? The daily's doing its own thing here. They got their own news going on, a lot of volatility. But once in a while, they kind of succumb to the market's pressure of what it wants to do. But Tesla's a good one. Apple looking nice. AMD is going to look the same, and Nvidia is going to look exactly the same. But ain't all good depending on what the market is going to do. Our possibles, Oxy, Piton, and Mara are not giving us a whole lot right now. Their daily looks good across the board. Yeah, daily looks okay. Oxy is okay, but Piton's daily looks all right for a possible breakout. Mara looks exceptionally well for a possible breakout. We just need to see at the market open how that volume is going to come in, and if it's going to pick a direction. All of these tend to be very, very choppy. That's the one thing they have in common, especially that first hour. They could be messy. So be on the lookout for that. All right, let's bring our moderators lineup, see what we got going on here, guys. As I'm doing this, take the time to just take that mouse over, take that iPad, whatever you're doing, just hit that thumbs up over there on our YouTube channel, and we appreciate that very much. It's going to help us out a ton to get our channel here growing on YouTube. We appreciate that. Sitting at a 147, 250, 200 would be incredible if you could help us get there. All right, so let's come over here, see our moderators lineup, see what we have going on, and we're going to bring this here. All right, resize this, bring this over, and we'll expand this in just a second. Let's make sure we don't cut off our watch list there. And here we go. So, all right, it is Thursday today. All right, so here's Thursday's watch list. Eamon looking at potential longs today, Mara and AMD. Peter will be looking at AMD, Apple, and Tesla, Pins, Twitter, and Beats for fun. Low flow is very active. Started off very active, kind of died down a little bit now, but it's still up 35%. We see the volume can come in and continue to push that higher. Thor, overall market, SPY and Qs, Tesla, Twitter, and Apple. Susan also looking at this, the SPY here. Tesla, Apple, Oxy, and AMD. Jared, Tesla, Apple, and Pins. Secondary list, Mara. And Megan looking at Oxy, UPS, and AMD. So across the board, guys, very, very similar watch list today. There's not a whole lot on this gappers list that looks great as far as what we like to trade. But for the most part, we're looking at some very good tickers that have been very familiar to us and very good to us. Apple, and AMD, NVIDIA, Tesla, and Pins today. So looking good there. All right, 912. We are all set here, guys. Did I miss anything? XBEV? Oh, NEO and XBEV. Jason, you threw XBEV out there. You reminded me of NEO, which has been so good to us this week. XBEV here. Not a whole lot on XBEV, but let me look at my buddy NEO. Here. Yeah, pretty quiet day on NEO compared to the other pre-market activities that we have seen. I'm still going to throw it as a possible because they can get going, and they have been trading very well. If you look at their daily action, in here, they've been just on fire, man. Beautiful drop yesterday. The day before that, they also had a great continuation. I mean, just look at their daily action, and it's been insane. So nice pop there. So yeah, definitely having you on the list today. Pre-market today is a little more quiet than the rest that we've seen, but I like to have this one on deck this morning. Wolf, is that a ticker? Wolf Speed. Oh, no. What is this? No. The green sand can. I don't think we ever seen your I have not seen your screen name here before on YouTube, but yeah, this is a no. And what that means is it's just brutal. No good. I mean, no shares being traded. Daily scares me. Yeah. No. I'm not gonna put that on the list. The spread. Where's the spread? Spread on this. Oh, you're talking about something else. Okay. Yeah, spread's 90+ cents here, right? No. Okay. Cool, guys. We are all set. Brian is up next. Andrew's up next. Trading live. Do not forget a couple of things before I let you guys go. Remember, we have a couple of things happening in our community. One being the meetup in Florida. So make sure you RSVP for that. Link is in both chats. Live trading happening within a month from now. You got the dates and information on there. Don't miss. It's going to be fun. You're going to have a couple of moderators and Andrew himself trading live that morning, and activities the entire day. So that's going to be a good one, guys. First time we're doing that. Be part of it. It's going to be incredible. With that said, guys, have an amazing day. Our recap today. Let me wait for Brian to throw his list out. Our recap today, we have pins. We have Tesla, which is going to be great here. Good volume already. AMD, Apple, and NVIDIA all doing what this gentleman here is doing, the SPY. So we'll keep an eye on the SPY and see what it wants to do. Looks like the SPY wants to go green here. It's trying at least. So let's see if it can make that happen. And there's our possibles. We have a few on here that, again, can tend to be choppy. NEO, I might end up moving up because I do like the way NEO's been trading, depending on how that market open is going to be. Beat did change its beat here. It is actually breaking the high of the pre-market. Oh, very nice. See, this is good. This is what you want to see on a low flow stock right here. Here, I was concerned that you're going to start getting the flush, right? They tend to do this, and you're just getting a messy situation. But this is looking rather nice right now. So breaking out of the high of 644, and if the volume 4.6 million, again, low flow stock, guys. So make sure you are experienced if you're trading this thing. Don't go out there just guessing in your size. Watch your share sizing on this bad boy. So good list so far. Beat not shortable. Yeah, usually these lower flow tickers that are running up like this, very difficult to find shares for short. And interactive brokers, you can't locate short inventory. But I know I used to have Centerpoint before. You could short locate with them. I had CMEC before. You can short locate with them. These tickers are usually very expensive to short locate. I've done it before. They're very expensive. It'll be like a service fee of $25, and then it'll be like 0.08 per share. That can add up very, very quickly. I remember one time I just to be curious, I wasn't going to short it. I looked it up and it was like just to buy like 1,000 units was like $200. So you're already $200 in the hole. So depending on how hot the ticker is, the harder it is to even locate shares for sure. I wonder if somebody has that feature. If you could search this, I would love to see how much they're charging to short locate B if you have that. Just located $84 for 100 shares. See, that's not a good deal for me. That is not a good deal for me. $84 for 100 shares, Andy. Well, I hope that 100 shares goes to like, $8, $15, and you can make that back and then some. But actually, no, you're shorting, so you want it to go down to $3. But yeah, that's tough. 100 shares, $84, right? All right, here's what I was waiting for. Our main guy, Brian, he's looking at just two things today. Pins, B, and the indexes, right? So when he says the indexes, he's also talking about what I have here: Apple, AMD, and NVIDIA. And Brian, you don't have Tesla today. I know Brian has not been too happy with Tesla lately. It's been wild. It's been a wild horse to ride, that's for sure. All right, guys, I'm all done here. Take care. Have an amazing trading day, Thursday. Tomorrow, no engineering the markets, but Norm and I will jump on at 8:30 and get you through the last day of the week. Look forward to seeing you there. Take care, guys.